Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the webinar conducted by Engine Markets. We would be beginning shortly. By the time the others join in, let's have a look at today's webinar topic. Today we will be focusing on how we can screen and select mutual funds of our respective category or our respective choice, wherein we would be analyzing how we can use various filter parameters to screen these mutual funds across categories. Next, we will be focusing at the risk and returns as the parameter, wherein we would be looking at the risk and the return scatter plot and seeing the movements of funds across a given time duration, considering risk and return as the parameter. Next, we will be focusing on monthly SIP, wherein investments made on monthly SIP, we would be looking how the breakdown of these SIP would show on the platform. And finally, we would be looking at situations wherein lump sum investment has been made in, and where we can create in periodic scenarios for these lump sum investment to compare across given time duration. And finally, the platform would be open for a Q&A session. You can either unmute yourself or write down your query in the chat box. So let us begin. So this is our Engine Markets terminal. The landing page is basically the Markets tab. Now for our topic related webinar, I moved the Funds tab, which is the fourth tab. Now this Funds section is basically a screener section wherein you can see a list of all the funds that are currently trading in the market. Now here you can input certain filter parameters, and that option is right here. You click on filter categories, and once you click on that, a box shows up wherein you can see in four boxes, which basically are the asset classes: equity, debt, hybrid, and others. Now, from these asset classes, you can select in multiple categories. There is no limit on the number of categories that you can select in this screener section. Now, for the ease of it, I select a single category, which is, let's say, FlexiCap as a category is what I select. And all the 39 FlexiCap funds that are currently trading in the equity market would show up onto this screener tab. Now, you see, I would want to shorten this list so that I can compare best performing 2 or 4, 5 funds. Now, for that, we have provided in filter parameters right here, apply filters. Here you see a filter called as minimum AUM. Let's say I just want to focus on only those funds which have a minimum AUM of 2,500 crore and above. I input that in this gray section and I click on apply. Now you see the list has gotten shortened. And as of now, you can see in a total of 19 funds based on one filter parameter of AUM that I have input. Now, let's say you just want to verify if this input has been taken up correctly or not. Right here, you see the column for AUM. I'll just click on this column heading. The data would get arranged either in the ascending or in the descending order. So right now, you see this AUM, the lowest or the minimum AUM is that of 2,625 crore and above. So you can confirm that this filter parameter has been applied. Now, next filter parameter that you see right here is the minimum age. Now, let's say I do not want to see very, very young funds. I just want to see funds which are 5 years and above. So in this gray section next to the minimum age, I input 5 and I click on apply. Now you see the list has gotten shortened, or I think the list remains the same as of now, just 16 funds. Now again, if you wish to confirm if this has been taken up or not, age as a column is mentioned at the very right corner. So you see right here, I just sort this on the basis of age. The youngest fund is, you can see, 5.53 years old. So you see this has also been taken up. Now, there are also options. Rather than using this scroller to move towards the right-hand side, we have given in certain preset columns right here. There are certain preset columns which helps you to view specific types of column. You just click on this drop down. You can see in specific columns. Let's say I just click on this return columns. So all the returns related column would show up onto this screener section. Now, another filter parameter that you see right here is the minimum return category. Here, once you just click on this minimum return, let's say I want to see minimum 3 years return. of maybe 15 years and 15% and above. I input that data and I click on apply. Now you see the list has further gotten shortened based on the return parameter that I have input, and that is what you can see right here in the 3-year return column. You see all the returns are 15% and above, 3-year returns. Now there are other filter parameters as well that you can see on this screener section. Right here it says minimum 95% historical VAR. Now in order to explain this in detail, I would load in a single fund. Let's say I load in Quant FlexiCap. So here I have loaded in a single fund, and you can see historical 95% VAR is what has been mentioned right here. So VAR basically means value at risk. This basically tells you the value of this specific fund that is at a risk. At a risk of what? At a risk of losing. So right here you see 95 is what has been mentioned. So 95 basically means with a 95% confidence interval, there is a 5% probability that if history were to repeat itself, my fund would go down by a total of 28%, while my benchmark would go down by a total of 25%. Now, if I just say this in simple terms, it would mean that let's say I invest 100 rupees in both this specific fund as well as the benchmark. My capital erosion for my fund would be 28 rupees, and similarly the capital erosion for my benchmark would be 25 rupees. Now here you can see historical VAR and implied VAR. Now these two VAR, the calculation remains exactly the same for historical VAR as well as implied VAR. The only difference is that historical VAR is calculated on the basis of historical returns, while implied VAR is something which is calculated on the basis of historical volatility. So this is what we mean by the value at risk percentage. And next filter parameter that you can see is the minimum Sharpe ratio. That can also be input. Now, one thing to note is that anytime you input any of the filter parameter in this apply filter section, every time you'll have to click on apply in order to make sure that the filters have been completely applied. Now, these are the funds that I wish to compare with each other. So I would have to take these to the compare section. And there are two steps to take the funds to the compare section. First is you can either click on this compare icon individually that you see next to the name of the funds, or else you simply click on this first option, add top 50 to compare. So just by one click, all the funds that are there in the funds section that I have shortened based on the list would directly move to the compare section right here. Now here we would have to input a common start date to do a fair comparison. And that option is right here in this settings icon. I click on this and start date. Let's say I want to run the analysis for the last 5 years. I click 2019, March 14, and I click go. So as of now, the data that is visible is since the start date that I have input, which is 2019, March 14. And you can also see in a prompt stating that a custom start date has been input by you. Next, let's say I just saw these funds, FlexiCap funds, on the basis of this cumulative return. You see the highest cumulative return in this 5-year time duration has been generated by Quant FlexiCap to an extent of 251%. Now, you would want to compare these funds with the benchmark as well. Since these are FlexiCap funds, I would input Nifty 500 as a benchmark. So that option is right here, add other item. Here, I just click on search indices and I type Nifty 500 and I click on this Nifty 500 and it gets added in as a row item right here. Now let's say I just want to look at the risk parameter, the standard deviation of these funds. So you see the highest risk is taken up by that of Quant FlexiCap. So we can see that Quant FlexiCap is also generating higher level of return and also taking up higher level of risk at the same time. And you can also view that in terms of its Sharpe ratio as well. It is higher, the risk adjusted return is higher or the highest that for the Quant FlexiCap. Now, let's say I just compare this Sharpe ratio for these funds with that of its benchmark. So you see, Nifty 500 lies right here. 0.52 is the Sharpe ratio of Nifty 500 in this 5 years time duration. And all the funds that lie above Nifty 500 are the ones which have outperformed the benchmark in comparison to Sharpe ratio in this time duration of 5 years. And the funds that lie below Nifty 500 are the ones which have underperformed its benchmark. Now, we would also like to highlight Engine Fund Score, which is also a methodology of ranking based wherein one of the consideration for ranking is the Sharpe ratio. So here I have loaded in a single fund, which is Quant FlexiCap. And next to the name of the fund, you can see in a black tile. I'll just click on this and you see this is a fund score wherein scores are assigned to funds on a month-on-month basis. And this fund score ranges between 0 to 10. And more closer it is to 10, the better is the performance or the fund score of that specific fund. Now, the methodology of assigning scores to these funds is very transparent, wherein we have given in 10% weightage to AUM of the fund, and the remaining 90% is divided between short, medium, and long-term returns and volatility, which is basically the Sharpe ratio. And a certain amount of consideration is also given to the age of the fund. So you can say that the fund which is comparatively younger would have a lower Sharpe ratio, basically stating that it hasn't proven its performance in the market. And these fund scores are comparable intra-category only, meaning the fund score of a flexi cap fund cannot be compared with that of a large cap fund or a small cap fund. Within the category, comparison is only possible. And you see in this category of flexi cap fund, the highest fund score is with Parag Parikh. And the second best is basically Quant Flexi Cap. The highest fund score is at 9.73. Now I come back to the compare section. Right here, you can also see in the relative columns for these funds. So these are the relative returns column respective to these funds. Now those are highlighted by this pink coded columns. As of now, you can see that the pink columns are empty or rather blank. Reason being that these have not been selected right here. So in order to activate these columns, you need to tick on this relative return bucket. Once that has been done, you see the data show up. Now, one thing to note that is the benchmark that you take right here in the relative returns column should be exactly the same what you have taken in as a row item for the returns column. Basically, to ensure that there is a fair comparison across all the funds that you have taken in. Since as a row item, I have taken in Nifty 500, here as well, I would take in Nifty 500. And I click on Nifty 500. So the benchmark has been taken in as Nifty 500. And as well, another important factor is that the start date for this relative return column should also be exactly same what we had taken for the returns column, which is 14th March 2019. So I just click on this 2019 and 14th March. So as of now, we would be having a fair comparison of all the funds that we have taken in. Now, let's say you just focus on this cumulative excess, which is basically alpha, outperformance of the funds against that of the benchmark, Nifty 500. You see the greatest or the biggest alpha is with that of Quant FlexiCap, 140%. And next, we would be locating beta. So beta basically tells you the sensitivity of a specific fund when compared to that of the benchmark. So beta with itself will always be 1, that you can see right here. And a beta less than 1 specifically says that your fund is less riskier than that of the benchmark. So maybe I just locate right here 0.64. It says that Parag Parikh is less riskier than that of the benchmark, which is Nifty 500, what we have taken right here in the relative returns column. Next, you can locate the up capture ratio and the down capture ratio. So up capture ratio basically tells you as in when your benchmark was in a bull run, how quickly was your fund able to catch up with the benchmark when it was in a bull run. And totally opposite is the down capture ratio, which tells you that when your benchmark was in a bear run, how resilient was your portfolio against the down movement of the benchmark. And we basically say higher the up capture ratio, better is the performance of that fund. And by higher, I mean more than 100. And same is for down capture ratio. We say lower the down capture ratio, better is the performance of that specific fund. Now, meaning of higher and upper basically means for up capture ratio, we mean more than 100, the better is the performance of the specific fund. Because right here in the up capture ratio and down capture ratio, we consider the benchmark to be at 100. So higher it is better for up capture ratio, meaning more than 100, it is better as an up capture ratio for these funds. Next, we move on to the rolling returns tab. So this tab basically lets you know the consistency of the funds that you have loaded in the main list. And right here, you can see in rolling window is what has been mentioned. Now, rolling window basically means the holding period. And you see 260 is what has been mentioned. Now, 260 is equivalent to 1 year, meaning there are 260 working days in a year. That is what has been picked up right here. Now, this rolling window is editable. You just multiply the number of years into 260. Let's say you want to do a rolling window analysis for 2 years. You multiply 260 into 2, 520. You input it right here in this gray section and you click on run. Now here the start date and end date that you see, these are editable. And the start date that you see has been automatically picked up. Now this is based on the age of the youngest fund that you have taken in the main list. So I go to the main list and I locate the age as a parameter. So right here, you see the youngest fund is 10.84 years old. And that is the reason a start date has been automatically picked up, dating to the date of the age of the youngest fund. Now this start date and the end date is editable as well. Now we focus on this average column. So this average column basically tells you the average of all the data points that you see on this line graph. And this column basically tells us that all the funds that we have taken in currently have outperformed its benchmark. Nifty 500 is positioned at the very last when I saw this on the basis of average. And then we focus on this positive percentage column. So this basically tells us the number of times a specific fund has generated positive return, considering that there are only two quadrants, positive and negative. Now, let's say I just locate this specific fund, HDFC FlexiCap Fund. So it says 81% of times, HDFC FlexiCap Fund has generated a positive return in a 260-day rolling window. Now, let's say I edit this rolling window to make it a 3-year rolling window. So basically, I input 780, which is 260 into 3, and I click on run. And now if I locate at this positive percentage column, you can see that almost all the funds have generated positive return more than 95% of times in a 780-day rolling window, basically a 3-year rolling window. Almost all the funds have generated 95% and above positive return has been generated. Next, I move on to the risk versus return scatter plot. So this is basically a scatter plot wherein on the x-axis, you can see in annualized risk, which is the standard deviation. And on the y-axis, you can see in the annualized return. And the entire scatter plot is divided into 4 quadrants: low risk, high return, low risk, low return, high risk, low return, and high risk, high return. Now, if any of the fund gets plotted on the right-hand side or extreme right-hand side of this scatter plot, those would be the ones which would have higher level of risk in comparison to the ones which gets plotted on the extreme left-hand side. Those would have lower level of risk. And in a similar manner, if funds get plotted on the upper end of the y-axis, those would have higher level of return in comparison to the ones which gets plotted on the lower end of the y-axis. Those would have lower level of return. Now, let's just focus on these two funds, which is HDFC FlexiCap and Quant FlexiCap. Now, if we just focus, we can see that the risk percentage for these two funds are somewhat near to each other, while the returns that has been generated by Quant FlexiCap is higher than that of the HDFC FlexiCap. Now, of course, the time duration that we are considering would also play a crucial role. As of now, we are looking at the time duration of maybe an 11-year time duration. Let's say I want to do the analysis for the last 1 year. So I input March 2023, maybe 14th March, and I click on go. So you see, Quant FlexiCap still lies in this high risk, high return quadrant. While for HDFC FlexiCap, it has moved, or rather moved towards the left hand side, towards the low risk column. So this tab basically lets you know that if two or more funds are generating similar level of risk, what is the difference in their return generation capacity? Next, the last topic is basically the monthly SIP chart right here next to the risk versus return. So here you have an option to input the installment amount. Let's say I input 10,000 as an installment amount. You have an option to change in the start date as well as the end date, and you just click on run SIP. Now at a gist, you can see in the XIRR percentage for these funds as well as the final value where an installment of 10,000 has been done for a time duration of 5 years. Now, if you want to see a detailed view of SIP for these funds, you can see a piggy bank icon next to the final value for each fund. You just click on that piggy bank icon, and in a new tab, you would be able to see exactly the same name of that specific fund and the same details in terms of the installment amount, the start date, and the end date. What we had seen right here in the monthly SIP tab, those would be taken up right here in this page as well. Now you can see in the breakdown of SIP for this specific fund in terms of the date, the NAV, the number of units under consideration, and the value and the final value. You just scroll down and you can see in the final value as well. Now, you can also view this in a graphical manner as well. So this graph that you see, the green line, this basically shows the linear increase in investment over the time duration that you have taken in consideration. Next is this orange line that you see. The orange line basically shows in the NAV movements of the funds in the given time duration. And the movement of these funds, the value can be seen on the right side of the y-axis. Right here, it shows the NAV movement. And then the blue graph that you see shows in the SIP value. Now, this value can be corroborated on the left-hand side of the y-axis. Now, if you focus, you'll see that as and when the movements of NAV, there has been changes in the NAV movement, similar changes can be seen in this SIP as well in terms of NAV movement. Now, this data on SIP can be downloaded in a PDF manner as well. A 3-pager as well as a 4-pager PDF gets downloaded on your end. So I would be downloading a 4-pager PDF. So such a PDF would be downloaded. At a gist, you would be able to see in the first page, the graph and the values, the time duration for which the SIP has been run. And the next 2 page basically shows you the SIP breakdown. All that we were able to see on the SIP tab will also be seen right here in terms of the breakdown. Next, this was monthly SIP. This such analysis can also be run wherein lump sum value has been invested. For that, I go to this point-to-point chart right here. Here you have an option to input lump sum value and create periodic scenarios of your own. Let's say I input a lump sum value of maybe 50 lakh rupees. And I wish to see across multiple periodic scenarios, what would be the final value for these specific funds. So as of now, you can see there are 5 buckets, 5 periodic scenarios can be created simultaneously. Let's say the first bucket, you see a 10-year time duration has been created. I just click on sort. And you see this tells me the best final value that has been given by Quant FlexiCap out of the list of the funds that I have taken in. Now, this entire data that you see can also be seen in a graphical manner as well. Such a graph gets generated wherein you can see the value that has been invested and the time duration for which the final value has been shown. Now, this data can be downloaded in an image format as well, and this can also be input in the PPT as well. Now, let's say this was a 10-year time duration. This is basically a 5-year time duration. Maybe I wish to create a 3-year time duration. Let's say I go to 2021, Jan 1st, to maybe 2024, Jan 1st. And let's say I just sort this. So this basically says that Quant FlexiCap has been performing better in all this time duration is what we can see. And this entire data can also be seen in terms of percentage, CAGR as well. And in any situation wherein the time duration or the periodic scenario that you have created is less than a year, let's say maybe for 2024 is what I create, from Jan 1st, 2024 to maybe March 1st, 2024. Absolute is what we click because this basically lets you know the absolute returns, wherein the time duration is less than 1 year. We select absolute as a specific point. Now, this entire data that you see in this point-to-point analysis can be downloaded in an Excel format as well. All right, so that is it for the topic related webinar. If anyone has any query, you can either unmute yourself or type down your query in the chat box.
Hi, can we do that future analysis into this also, like point to point and monthly SEP for the forthcoming 5 years, 3 years?
Hi, this is Prajakta. So everywhere on the platform, what we have is a historical analysis, right? So you cannot anywhere on the platform put in a date in future and run the analysis for the simple reason that there is a lot of uncertainty that is attached to that. So we do not show any extrapolating the data to future. So always historical.
Okay.
Hello, Sriram here. I had a doubt.
Yes.
So in the compare tab, can you pull out the mutual funds of a client's portfolio and then do all this comparison?
Yes, that's possible. So for that, what you, yeah, of course, first we are removing the entire components. And then by clients, you mean, let's say that could be your existing clients. And if you're already, set up the RTA connection, you could simply go to the client section and
Okay.
locate any particular clients. Let's say Pawan Bakshi is the client that I want to, analyze. What you first of all do is click on the name of the client, his portfolio gets open like this, and then you see this run analytics tab, right? So you click on that and a detailed portfolio analytics runs on this, right? Of course, this is portfolio level, but now, as you said, you wanted to analyze this in the compare section. So once the analytics gets run, you will see a compare icon beside the name of the portfolio. 1 second, let this get loaded. Yeah, right there. Beside the PDF, there is this compare icon. All the components of the portfolio in one single click will be added in the compare section like this. And then the same analytics could be done. Now, this is the first way of adding a client's portfolio to the compare section. There is one more efficient way of doing that. I will show you that as well. Ansu, can we please remove everything again? For example, let's say now you want to onboard a client named Anurag, right? So there is this add portfolios and securities tab right there in the compare section itself, which is of course linked to your RTA. So what you could do is search for the name of the portfolio and just click on the name, and then all the whole links from the client's portfolio gets added here.
And for like the manual data upload done through Statement Analyzer?
Yes, so for that, the portfolios would be either saved in the portfolio section or the client section, right? So we cover that as well. So for an example, I think, yeah, can you go to the portfolio section? Yeah. So in this case, we have this my test portfolio as a portfolio, which is saved in the portfolio section. Let's say this is, taken in from the statement analyzer, right? What you also can do is in the same tab, in the compare section itself, just search for my test portfolio, and then that the holdings of the portfolio could be getting added there as well. So that works for that as well.
Okay, in the search bar and compare itself. So
Yes,
that's not
exactly.
only for RTA connection, but
Correct.
also
Even for the portfolio. So you see that for portfolios or clients, just search for my test portfolio, and then that could be incorporated.
okay. Thank you.
Yeah.
Uh, I had one more doubt regarding
Yes.
the calculation of Sharpe ratio and the standard deviation.
Okay.
So that's from inception to now, correct?
No, look, so if in the compare section, there is no date or there is no exclamation marks telling you that, okay, this is since inception or this is not, then this is going to be since the respective fund's inception date. So for an example,
Okay.
DSP small cap fund is a 16-year-old fund, is what I can see from the age, right? The Sharpe ratio number that you see beside that right now is since the inception of that fund. So that's 16-year Sharpe ratio. Let's say now you want to look at the Sharpe ratio for the last 3 years, let's say, right? Then what you do is go to the settings wheel that you see beside the returns column. You put in a start date. So let's say 3 years. So 2021, let's say 1st of March. And then you click on go. Now you will see the Sharpe ratio number change. 1 second. Yeah, right there. DSP small cap now has a Sharpe ratio of 1.07. Now this is for the last 3 years. So this is how you can customize that.
Okay. And for end date?
End date is always latest. I mean, today,
So that
meaning
cannot be
yesterday's.
changed.
No, that cannot be changed. That's always latest. If you typically want, I mean, that cannot be changed in the compare section. You can definitely choose to click on single fund, open the analytics, and of course, then change the end date as well. For an example, yeah, so we've loaded in HDFC small cap fund in a new tab. There are these two columns, start and end date. You could change it here. So let's say you want from 2016 to 2018 Sharpe ratio for these two periods, right? So that you could do. Yeah, let's say 1st of March. Now the Sharpe ratio that you see is for this time period that you've put at the top. But in the compare section, it is always latest. End date is always latest.
Okay. I'll just end with one last doubt. Is there any way you can check returns on quarter basis?
Sure. So for that, I mean, there's you'll have to create those quarters. As we were just highlighting the point to point, right? What you could do is go to point analysis, build in 4 scenarios, right? So Q1, Q2, Q3, Q4 of any financial year or any calendar year that you are looking for, and then accordingly can sort them. So this is how you can
Okay.
check for quarter on quarter.
Got it.
Hi, this is
Thank
Arnav.
you.
Just one more thing you can do is if you're interested in quarters, obviously quarters are static, so it's be like Jan, Feb, March or something like that. But in the rolling section, you can actually define that period. So let's say quarter you call about 3 months. So you would use a rolling window of approximately 63 days. What that would do is instead of showing you return of 1st Jan to 1st Jan to 20th March or 30th March or something like that, it's going to take if you put like 63 or 60 days on here, what you will get is actually all the 3-month periods from 1st Jan, from 2nd Jan, from 3rd Jan, from 4th Jan onwards, all of them. So this would be a much more comprehensive analysis rather than defining calendar quarters where you jump 3 months as you move to the next quarter. This will actually show you all of the 3-month periods covering every single date.
Okay. Thank you, Arnav.
No problem. Any other questions, please let us know.
Yes, this is Vinay. There is a limit of 20 schemes for comparison. Am I right? In
So
a
the
client
limit,
portfolio.
yeah, so the limit is actually, there's no limit in terms of how many funds you add here. There is a limit when you try to print out a PowerPoint report. So the limit only applies if you want to print out a report, but otherwise you can have, 50, 80 funds here also. It's not an issue.
It will still be added to compare.
Yes, yes. In fact, when you go to the screener, there is a button there. It says add top 50 to compare.
No, I'm saying from client to compare.
That's fine also. That's fine. So if you have a client portfolio with more than 20 holdings, it will also add. The
Okay.
only restriction is when you download a PowerPoint report from the compare section.
Okay. Compare and improve both are possible, irrespective
Yeah.
of number of schemes.
That's right. That's right.
Okay,
It will
thank
just,
you.
you have to be mindful that it will take a little longer if it's a lot of funds.
Yes.
Yeah.
Thank you.
Hi, this is Anand. Can you please let me know how to go about checking the rolling returns? That's just still not clear with it. Say for dyslexic category, for 3 years rolling returns, what is the best method and number of days you are mentioning?
Yes. So, you can just add some funds to the compare section. And as you go to rolling, so this will always be number of working days. So if you want to do 3 years, all you have to do is, so we use basically 260 days for 1 year. So, it'll just be, that times 3, so 780. So you put 780 days in there and you'll actually get a uniform period of time. Because if we look at, 3 years from, let's say, 1st Jan 2021 to 1st Jan 2024, when you go to 2nd Jan 21 to 2024, the number of days can change. But in the benefit of using an exact number of days is that you get all these returns are actually over the same exact number of working days. So now what you see in front of you is the 3-year rolling analysis for all these funds, next to each other.
Okay, sir. Got it. So 788 is the working days for the 3 years.
Working days. So basically, we consider Monday to Friday, just without weekends.
Okay. Thank you.
No problem. Any other questions, please let us know. Okay, if there's nothing else, we can close for today.
Yes, sir. Thank you all for joining in for today's webinar. You can anytime visit our YouTube page right here. There's an hyperlink. So we have a dedicated playlist for all the webinars that have been conducted up until now. A total of 103 videos have been uploaded, and today's video will also get updated by the next week. Thank you all for joining in, and see you again next week with a new topic. Thank you.